Hey guys, John here from Side Hustle Investing, and I wanted to do this quick video talking about my first covered call that I placed in XLU, and I placed it back in December 13th. It was my first real money trade that I placed in my HSA account. So this was the post I made when I went through the entry, and you can kind of see if you go to sidehustleinvesting.com and go to the trade journal, you can see how I go through my thought process when I enter trades. I first check for portfolio fit, but with it being my first trade, that was pretty easy to decide. I check for liquidity, for the implied volatility, making sure that the strategy is in line with where I should be for the volatility and my directional assumptions. Picking the strikes, doing position sizing, and what my plan is going forward for management. So that was back in December 13th. Let's see how it's worked out so far. I'll go ahead and switch over to my platform, and let's see here. So if you go back to December 13th, let me see if this works. So this line here is the December 13th when I placed the trade. So you can see it was trading right around $49 at that point, at the high of that point. Over the course of the trade, it took a pretty big drop down from 49 down to about 48, maybe 47 and 3/4 or so. And then from there, it's trade rather range bound. And when I was placing the trade, since it was my first one, I wanted to make sure that I was understanding all the different aspects of the covered call. I went ahead and placed the important price targets on the horizontal lines here, on these support and resistance lines. So with a covered call, as you guys know, you are okay with the price of the stock going up, but not too much. So I listed here at the 50, let's see, this is $50.35 was the price that I had marked. This was at the point where my call would get exercised and the 100 shares that I own in XLU would be called away from me. So it's a good thing because the stock is going up, but a bad thing because I would lose them at that strike price. Now, down here at this point, this was my break even, where if the price of my option, if the price of the stock dropped below this, let's call it 48 and 37 cents or some, 48 and some change. If the price of the stock dropped below this at expiration, then I would have reduced my cost basis successfully, which is the strategy behind covered calls. You're slowly chipping away at the price you paid for that stock by taking in that credit every time you sell the option. So I would have been successful at that objective, but I would have still overall lost some money because just the price of the stock went down. But as you guys know, that's totally a 50-50 guess whenever you buy a stock, whether it's going to go up or go down. And as you can see, this one, it's kind of been in this very choppy range over the course of the, since I purchased the option, or since I sold the option. So we're coming up here. My expiration date for the option is right here at January 20th. So I fully expect the option to expire worthless. I'm going to go ahead and let it run till expiration because given that it is a low priced security, it's $48.50 right now, and I'm only collecting about $40 of profit off of the initial credit I received from selling that option. It doesn't make sense for me to go ahead and put in that additional transaction cost, especially with it being so close to time and being so far away from that risk of being exercised up there at that $50 and above mark. So I'm going to go ahead and just hold steady. If I was able to get a different commission structure in Thinkorswim, I probably would have closed this off much earlier and re-rolled with an additional covered call. As you guys can see, let me go ahead to the monitor tab. You can see that my trade price was $38, and it's now trading at a cool 0.035 mark. So my profit and loss, which I can't actually see right now, it's hiding from me, but it was around the 93% mark so far. So essentially, I've already squeezed out as much of that theta decay from this particular option, it doesn't make a whole lot more sense to let it roll through expiration. But given the fact that I would be losing around $10 just from commissions alone to close early, it doesn't make sense to do that and give up that profit window. So I'll let it expire. If anything changes, I'll update this video. But as soon as this date does come around and the option does expire, I do intend on rolling yet another covered call, and I'll enter another video for that and determine what delta value I want to roll with on this one. If it makes sense to continue with the 30 delta, which was the original strategy here, or if I want to get more aggressive or less aggressive, we'll find out that day. So that's it for this video. I appreciate it, and happy trading.